let's talk a little bit about what we've seen, because we've kind of come round robin from where we were the day before Thanksgiving. We had all of these concerns that got pressure on the market, drove stocks down, but we've come right back. How do you feel after all of that? Are you feeling great about things looking maybe a little better on the COVID front, or does the Fed worry you?
I would say the Fed worries me more than the virus, and that might be a foolish consistency on my part. I think my own opinion is that we're vectoring more towards some sort of uneasy truce with the variant as the economy comes back and the global economy comes back. The Fed, though, I think has its work cut out for it as we go into 2022. The CPI. We'll get a fresh number tomorrow, but has been over 5% for the last 6 months. And it doesn't appear, that is a major change for next year. We're looking for at least 2 Fed tightenings. But you're also going to have some fiscal drag next year as well. And so I just think to the extent to which a lot of the stimulus was a good portion, led to a good portion of the rise in stocks, we have to consider the other side, that as some of that stimulus tends to drain away, that returns are going to be a bit more challenging.
We had Roger Ferguson with us earlier this morning, and he was talking about the results of a survey of CEOs who are actually more pessimistic, I think, looking into 2022, especially when they're looking at their own businesses because of labor shortages, pay hikes, and supply chain issues, real snarls there. We keep thinking we're at the high watermark for that, and maybe things get better from here, but maybe it takes longer than we'd been anticipating to come down off of all these problems. Maybe we kind of plateau for a while before things look markedly better.
Well, Becky, I think there's certainly things like used car prices are not going to be up 10% or something. You're going to have certain supply chain issues which will work themselves out. There's no two ways about that. By the same token, I also think that there are some structural issues here in terms of labor. Part of that, I think, is driven by the fact that you still have about 4 million people missing from the workforce. You have vaccine mandates in some parts of the country. There are other things going on there. The level of money, the stock of money, is up 33%, M2. That's pretty structural. Housing's up 20% year over year. Housing has a very big impact on the CPI, as you know. And so it doesn't seem to me it's going to be particularly easy to vanquish inflation. And I think transitory, kind of started out as a forecast and now has become, I think, a little bit of a punchline. And that may be a little bit what your CEOs you're talking to are highlighting. And so the good news is the recession is unlikely. The bad news is that these challenges, I think, are a lot stickier, as we found out, than we thought previously.